Welcome to Trading Lounge and the European indices for the 27th of September. So yesterday we were speaking about this. We were looking at this as an A and a B and a C wave down through here with 5 waves through here. So we're looking for a move to the upside. So we've got that move to the upside now. Let's go in and have a look at that. I'm still cautious of a bearish move, and we'll show at what point that becomes important, which is here. So from wave B high here, we've got our 5 waves down, and we caught this low yesterday. So we're looking at the 61.8% retracement level, which is in here. So if it's going to fail, this is where it's going to fail from. I don't see it failing because I can see that the UK market's got further to head higher as well. So one of the things we can do here is the closest largest number here is 12,350. So if that 12,350 here becomes a nice support at that point, then you know that you're safe at that point. And of course there will be on the tick chart, you'll see that the market will come up, it will react to it, it'll move up, and it needs to basically migrate from being support, being resistance over here, to being support. So a bit like at the 300 area through here. So this is group 1 over here. So from the 12,000 we've got 100, 200 and 300. Normally when we find support on the 300, then that really sets the target for the next level up, which is the 500 here. And when we look at the UK market, it's probably a good idea to have a look at that. That's actually trading ahead of its correction here. So this correction over here, I'll just jump to that now actually, because I think it's important. So on this 4-hour chart here for the UK market, you can see how high it is up here now. So it's actually moved, it's got a nice strong third wave up here, and a fourth wave has pulled back to 38.2% retracement, and it'll go higher. So it'll make a new high here. So it's making that new high. So that's important for the DAX. The DAX is lagging, of course, from its high here, but we've seen the DAX lag behind the S&P for days and days, and then suddenly catches up in a sharp move at some particular point. All it needs is a bit of healthy news, no matter what the news is, just something healthy, so it can catch up. So I would expect that it can catch up, but I just wanted to point out, if this market was going to fail, then this is the number it's going to fail at, and then you can think that out and take precautions, and simply wait for that to become the support. It'll have some sort of vibration there, and then you just need to take the high from that point. I'll just have a little look on the tick chart here just to see where we are with this. So yesterday I think we were counting up I think we had here yesterday when we were talking about this, we counted up as 1 and 2 and 1, 2, 3, 4, 5 to here, this point, and then we looked at wave 4 pulling back, and then wave 5 to the upside at 3 here. So yeah, it's done a nice correction across here. It's strong. Wave 2 never pulled back deep into its 61.8%. If I can just borrow these for a moment here. I'll just check on this here. I'm not sure if that's wave 1 and 2 here, and then 3 to here, and 4 to here, and 5 to here, or that this is wave 1 here and 2 here, then wave 1 and 2. But let's just take it to the most conservative point within all of this. So that's if I consider this as 1 and 2 and 3 and 4 and 5 here for 1 and back for 2 here and 3 here and 4 here and 5 here, that's the most conservative view here. I could have this as 1 and 2 and 1 and 2, and then all of this just the third wave in here, you know, as 1, 2, 3, 4, 5 for the third wave, and that could be the case as well. So I just need to remind myself here with this, so I'll just leave that there. But this does appear corrective here, so we should be pushing up further. And this is our 12,350 here. So I think we're okay for higher ground. It's just that you'll just see a dance across this level here. The other levels here, of course, from 300 is 10, 20, and 30. So if I wanted to trade long from this point here, I would wait for, well, this is the arrival, the reaction, the first high above the level, and then an A and a B and a C here, or some other sort of sharp little move here. Because it's on the close, you know, it jiggles around a little bit, but this top here becomes the catalyst. This picture here, of course, is, you know, the picture that we always use, which is the classic trading levels pattern: the arrival, the reaction, the first high above the level, a corrective wave, and then the entry over here. We can take that entry here, we can take this entry, or we can get right in close here for this one here. So that's pretty much that. The arrival, the reaction, the first high above the level, some type of correction here. We take that one, and then we take that one, and then we bring it down lower to take this one here as well. I'm just going to get rid of that, won't be able to see that. And this is also wherever you see number 3, it's group 1. So this is group 1, and then we've got 30 here. So this is a smaller group 1. Because the waves are in fractals, I use the Fibonacci price as a price ratio, but also in fractals as well. So it just keeps narrowing down. There'll be 10 points between 20 and 30. So there will be little micro levels in here: 1, 2, 3, blah, blah, blah. You know, 1, 2, 3, 5, and 8. They're the only numbers you really need to think about: 1, 2, 3, 5, and 8. Right, let's go back to the FTSE and have a closer look at that. So this is the 4-hour chart here. We were talking yesterday about, you know, taking the break above this. So on the 1-hour chart here. So just for the sake of it, I'll just copy these here as wave 1 and 2 here and 3 here. From the low of wave 2 to the top of wave 3, we've come back to the 38.2% retracement level, so we can put that in here. We know wave 4s can get complicated, so it might be possible to come back down here and then move up through here, but whichever way it's going, we haven't finished this sequence to the upside. So just keep the stop out of the way. Don't put it close in here, put it down in here somewhere. And then wave 5 here, copy that here. So if there's going to be further play for this, then just remove that. We need to look at this as an A, B, C here. So depending on how far that goes up there, then of course you'll take the low here and you'll put that up here, and you'll look for that 50-60% retracement level back into that space here. It doesn't have to pull back to that 50-60%, but there'll be plenty of supports over here for that, so it might even be a little bit shallower than that. But then take the top and the B wave here and then go long again through here. One thing I want to point out here, though, is that coming back to the 4-hour chart here, this is really quite exciting because, you know, we've had little wave 1 here and 2 here and 3 here and 4 here and 5 here for that. And then from this point, we could have had an A and a B and a C wave through to here. But then we've had this correction through here. I figured it was correction when we were in about here, and then it got really complicated, and it took a while to work through it all. But the good side of this now is that I can just clean this up here a little bit. So we should be going much higher. So if we get 1, 2, 3, 4, 5 here, then we should get an A, B, and C here, and then we should get a strong move up here. We should. What I'm just trying to say here is because we got 5 here, we should be getting another impulse wave over here. So that's the good news here. The only catch here I could probably see is the top of this. The top of this move here. I'm just shooting the breeze here though, but it's possible that that's all of. Let's tidy that up a little bit. This may not be the case, but I need to look at everything. So it could be 5 waves up here for the A wave here, the B wave here, and a C wave just coming into this old high here. Probably not the case, but I mean, my job is to look at everything, so that's what we're looking at. So it's possible that it could fail at that point here, but that's okay because it shouldn't trick us. It shouldn't, because once we've got the top here and the B wave here, the ABC here, we can just draw that line through here. We can just draw a line through here. We can just take that top out here on the way up here. We may even get a better move down through here. Because this is the 3rd wave here, it may not even pull back into that far either. Do you know what I mean? It can cascade to the upside, just keep sort of having very shallow retracements in here like it has done up in this area through here. So we need to be mindful of that. But we're going to stay long for the time being, and then we'll also look at the this market's basically leading the other global markets. I haven't checked all of them, but it's certainly leading the S&P and the DAX and so on. So if it's leading up here, we can continue to see that. But also too, if it's still leading by a long way, then we'll be able to look back at the DAX and the S&P and so on, and say to ourselves, well, those markets need to complete their 5 waves as well, and this market's already completed that here. So the other market, they can all help each other move forward. So we'll find a way. We'll see a way through. Alrighty, I'll just leave it at that. Thanks for tuning in, and enjoy the weekend. Cheers.
Report unless it's done.
Really?
Just holding up some flags.